Hey guys, welcome to Pumpy Pump Crypto. My name is Nate. Today what I want to talk about is correlation. When Bitcoin was getting around its all-time highs recently, I saw the same videos coming out from every single crypto influencer on YouTube, all of them asserting the same thing, that the DXY was something we needed to really pay attention to. Also the stock market. And these same things come up whenever we see periods of high volatility in Bitcoin. It seems like everybody says, hey, watch the DXY, watch the S&P 500, watch gold. You know, you need to really be aware of the correlations that exist there. That's one viewpoint. The other viewpoint, that Bitcoin's just an uncorrelated asset. And I wanted to do my own investigation. So in this video, you're going to see the results of my investigation, and I'm going to answer the question definitively whether or not Bitcoin actually is correlated. We're going to start with the US dollar index, the DXY, and we're going to do a deep dive on DXY BTC correlation.
We up and I'm feeling like a new me. Stacking new sets, some new E. NFTs, all of them unique. Back in my zone like 2-3. All time high, hit a new peak. Let's go. Homie, the Bulls is back. I said the Bulls is back.
If you guys like the content, please do me a favor. Hit the thumbs up like button, subscribe to the channel, and share this with other people who might find value from it. We don't make any money off this channel. We just want to get this word out to people and help investors. And anything you see in this is not financial advice, simply my own analysis and opinions of the Bitcoin market. So here we go. We're looking at this article on MarketWatch. Is Bitcoin an uncorrelated asset? These stocks and bonds boost correlations higher and lower than Coinbase. So we're not going to look at the whole article, but I just want to kind of show what I think is a very good example of the sort of article that you'll see in the mainstream media when you're researching correlations. You'll see these on MarketWatch, Seeking Alpha, Bloomberg, Forbes, and so on, as well as in the Bitcoin realm. They're asserting in this article, Bitcoin's correlation with the NASDAQ 100, as measured in late May, was around 0.2 on a rolling 20-day average. Now, when did this article come out? Let's take a look here. June 4th, 2021. I just want to draw your attention to the charts here, because this is what the media tends to do. Why is this date significant? I'm going to ask this question to the class. Why is the date June 4th significant with a 20-day rolling basis correlation examined? Well, to answer that question, let's go to the daily time frame. And honestly, I shouldn't be on my crazy Coinbase chart because it's a mess. But I can prove this using any chart. I mean, they totally cherry-picked this data from about right here to right here so that they could demonstrate correlation coefficients existed. So, look, we're asking the question, guys, is it correlated or not? We don't know. We don't know. However, the data says that the NASDAQ 100 has a 0.2 correlation, and then the S&P 500 has a 0.29 correlation. If you didn't study math like I did, what does that even mean? Is that significant? Finally, this article shows a chart of Bitcoin correlations. You could see the Grayscale Bitcoin Trust having the highest correlation of about 0.8. And as we move down, we see that the US dollar index, oh my gosh, you guys, if you see this chart, what's the takeaway? Like, don't even take but 1 second. Look at it with your intuition. You could see that you should pay attention to that US dollar index because it's the only one that's negative, and it's way negative, isn't it? It looks way negative. It's all the way at 0.4. And here we are. As the chart illustrates, the US dollar has a negative correlation with Bitcoin at negative 0.37. And is that significant? I'm going to answer that question and give you the TLDW, too long didn't watch. No, it's not significant, and no, those numbers are not accurate. Those numbers are based on short term, and I think it's a gross misinterpretation of how correlation coefficients are meant to be used in interpreting statistical data and results. Here's the point of view that I found interesting, because there's only been, you know, I said all the crypto influencers, but you know what? One crypto influencer has consistently been correct in stating that Bitcoin really isn't correlated to anything. This article came out in the light of the huge 2020 COVID crash in March, and I'm just going to come down to here. They're investigating the question, and this is what I want to investigate. Crypto's largest coin stated as a non-correlated asset. Morgan Creek Digital co-founder and crypto aficionado Anthony Pompliano noted Bitcoin's comparative action in a March 16th tweet. Bitcoin is basically flat today, and the stock market is down double digits, he said. Don't hear many people yelling about Bitcoin is correlated today, Pompliano added. Truth is, correlation doesn't matter over short periods of time. Over months and years, Bitcoin remains a correlated asset. That's really key right here, guys. Truth is, correlation doesn't matter over short periods of time. Over the years, Pompliano has piped up many times defending his stance of Bitcoin as a non-correlated asset. Bitcoin is definitely a non-correlated asset. See, that's the thing that got me wanting to investigate this. Look at the confidence in that statement. Pompliano is asserting that it's definitely a non-correlated asset. How can he assert that? Well, I thought maybe he was just throwing a little propaganda in there. There's a fly coming at me. But this isn't propaganda. It's mathematically sound. So if you look at the correlation between the digital asset and the S&P 500 over the last 180 days, it's at 0, he noted. If you look at it compared to the dollar index, it's near 0, he added. As of a January 2020 interview with Cointelegraph, Pompliano said his position on the matter had not changed. The most important part of Bitcoin when it comes to the global hedge is the fact that it's a non-correlated asset, meaning that as stocks go up or down, Bitcoin doesn't have a correlation to that, he told the media outlet. Now, we're not going to examine in this first video or maybe even the second video the stock market correlation. We're just going to examine the correlation with the DXY and see what it is and if it matters or not. Okay, guys, so now it's time for the math lesson. So before we get to a definition of what a stock correlation is, I just want to quickly remind you guys to please like the content and subscribe to it. So, what is stock correlation and how do you find it? Here, correlation is meant to be measured over a period of months or years rather than days to get a sense of how two or more stocks move. And you can see in this article from Yahoo Finance, they talk about here why correlation matters for investors. Stock correlation is important because it can help show an investor that they may not be as diversified as they think. You may have stocks in different sectors, but their returns depend on the same thing. For example, the economy in a particular state. Your portfolio is getting almost no protection from diversification. I wanted to bring this point up because Bitcoin, if it's too correlated to the stock market, if it's too correlated to the dollar, then you have this effect where you're not getting hedging. And the idea with Bitcoin is, at least if you're in the United States, you're getting more international exposure and you're getting exposure to a lot of other things that you wouldn't get that are outside the United States financial system. Therefore, that lack of correlation is going to be helpful. What is the correlation coefficient? This is from Investopedia. The correlation coefficient is a statistical measure of the strength of the relationship between the relative movements of two variables. The values range between -1 and +1. A calculated number greater than 1 or less than -1 means there was an error in the correlation measurement. A correlation of -1 shows a perfect negative correlation, while a correlation of +1 shows a perfect positive correlation. When we would call that a linear relationship. If you get a correlation coefficient of 1, that's a linear positive relationship. If you get a correlation coefficient of -1, that's a direct inversely linear relationship between two variables. So, key takeaways here. Values always range between -1, strong negative relationship, and +1, strong positive relationship. Values at or close to 0 imply a weak or no linear relationship. This is important. Correlation coefficient values less than 0.8 or greater than -0.8 are not considered significant. So even if we take this article here, if we take this with any kind of truth at all, we're still seeing numbers that are all way less than 0.8. This is 0.29, this is 0.2, and then this negative correlation is -0.37. In fact, the only statistically significant correlation in this entire list isn't even MicroStrategy. It's Grayscale Bitcoin Trust when we use that definition of 0.8 or higher that is being used right here on Investopedia. The strength of the relationship varies in degree based on the value of the correlation coefficient. For example, a value of 0.2 shows there is a positive correlation between two variables, but it is weak and likely unimportant. Here's the equation for calculating it. We're not going to get into that, but I do want to show you from this paper here, because I thought it had a good example in it, that I want to talk about interpretation of it, okay? Because correlation is not the same as causation. And what we see all the time in the Bitcoin space is people say, well, you better watch that dollar, because if the dollar goes up, Bitcoin is likely to go down. It's going to face that downward pressure. You'll also hear people saying, you know, well, we got to watch the stock market because if it crashes, Bitcoin will crash. Bitcoin's speculative. It's a risk-on asset, just like the stock market is. And there's elements of truth in all these things, but I don't think that, I think we give it too much weight. It's given way too much weight. And so what you can see here is that when you're thinking about correlation coefficients, X and Y variables, the problem is that we were all trained in our algebra classes to think of X as the independent variable and Y as the dependent variable. In other words, X is an input and Y is an output. And we only would change X to see how Y was affected. That's like what algebra was all about in high school, right? But with correlation coefficients, we're not assuming anything. We're just looking at X and Y. We're not assuming one's an input and one's an output. X could be the input, Y could be the input. Or maybe neither one's the input and they just have some weird relationship. And investors are always trying to find these relationships because they're exploits, right? They're like hacks. If you can identify some kind of relationship, you can perhaps create an algorithm that says every time the DXY goes up, we're going to sell Bitcoin. Every time the DXY goes down, maybe we'll buy Bitcoin. But is that a good strategy? I don't think it is, because correlation does not imply causation. As a further example, a plot of monthly deaths from heart disease against monthly sales of ice cream would show a negative association. I wanted to bring this, when I used to teach to my students in China, I would always bring up the example of shark attacks and ice cream, that there's a positive correlation. And there is. I mean, look it up. You can see clearly that as ice cream sales increase, shark attacks increase. Or put another way, you can see clearly that as shark attacks increase, ice cream sales go up. So does that mean that people are getting bit by sharks and they go eat more ice cream? Or that people eat ice cream and that causes sharks to bite them? No. There's another variable, right? The variable that actually matters, that is connected to both of them, that they have in common, is that it's summertime. It's warmer. You see this relationship in the southern hemisphere and the northern hemisphere, so we know it's true. It's statistically significant and it follows the law of large numbers. And here, why do we get this negative correlation? Well, it's hardly likely that eating ice cream protects from heart disease. It is simply that the mortality rate from heart disease is inversely related, and ice cream consumption positively related to a third factor, that is environmental temperature. Here we have the Bitcoin USD price versus the US dollar index, this pink line. Remember that the DXY does not trade in a vacuum. It is connected to a basket of currencies, so it depends on the euro, the yen, other international currencies. What I did here is I divided this up into intervals on the weekly time frame of where the DXY is increasing or decreasing. Here you can see the DXY is increasing back in 2011 while Bitcoin is falling. That's expected behavior. I'm going to put an X everywhere we don't get expected behavior based on the stereotype that there's an inverse relationship between Bitcoin and the dollar. Here you can see the dollar falling and Bitcoin's falling. That's not supposed to happen. Here you have Bitcoin falling while the dollar's falling. That's not supposed to happen. Dollar going up, Bitcoin going up. That's not supposed to happen. Dollar down, Bitcoin up. Not supposed to happen. Not supposed to happen. Not supposed to happen. And some of these are quite inconclusive. Why are they inconclusive? Because in the end, the result's inconclusive. There is no correlation. There is no spoon. Kind of not supposed to happen. No, not supposed to happen. Not supposed to happen. Not supposed to happen. That's supposed to happen. This is hard to say. Bitcoin's going up. Dollar's going up. Then when the dollar gets to its sort of max right there, there's a dump. So it's kind of inconclusive. It seems like what the bears would say, or somebody who believes in the inverse correlation would say right there. But here, no inverse correlation. No inverse correlation. Opposite, good. Opposite. So I just want to show some periods. Like, look at this period right here. DXY is going up and Bitcoin's pumping. Big time. And same thing here. And this is like weeks. And here the DXY goes down. Bitcoin goes up for a while, but then Bitcoin goes down. When the DXY is going down, that's not really supposed to happen. So it feels like that's not normal, so-called normal behavior. That's sort of expected. Here we've got some rising behavior though. And we pumped here when it wouldn't be expected. The dollar's falling all throughout this realm. And Bitcoin pumps, that's expected. But then once it starts pumping, dollar reverses and Bitcoin doesn't care. Goes up anyway. But let's talk about this white line right here and what it is. This here is a correlation meter I found, and that was coded by somebody else. I watched a YouTube video, and I use this because I can choose how many periods to look back and calculate a correlation coefficient based on that. So if I set the periods to, like, say 20, and then I go to the daily time frame, I can go, like that article asserted, I can go all the way up to where we're basically at in our year. Let's find let me get a cleaner chart. All right, guys, so first of all, in this messy Coinbase chart, I wanted to reproduce receiving the negative 0.37 correlation coefficient for the DXY. This function here, this white line that says correlation meter, currently I set it to the 20 last closes for the DXY as well as the 20 last daily closes for the Bitcoin price here on Coinbase. And what you can see is here we are in the middle of 2021, just like that article did, going to about June 2nd here. We are getting a negative correlation coefficient. Actually, they must have taken June 3rd because that's where we're getting negative 0.36, very close to that negative 0.37. I also examined this on Bitfinex and I got a similar result. You know, you can see that this is kind of cherry-picked data because if you are choosing anywhere in this realm to assert what the 20-day rolling average was for that correlation coefficient, or, okay, let me start with this. Correlation coefficients in and of themselves are lagging indicators. They're going to be based on, I mean, because these are time series, so we're talking about stuff that's based on the past, and it depends. To get more precision, you need to take a larger interval. So taking a sample size of 20 is pretty small. That's what I'm trying to say here. And as you can see, my assertion is true because look how noisy this data is. Try to tell me what the correlation is of Bitcoin based on watching what happens if we take a rolling 20-day average. Taking a rolling 20-day correlation coefficient, we're calculating it every day based on the last 20 data points. And you can see here we got a negative correlation, but in regions like here, I mean, there's times where we get positive correlation. So right here, it's saying there's a positive correlation. Does that mean that the DXY and Bitcoin right here are moving in lockstep? No. It means they moved in lockstep over, so right here where we have the highest positive number, that means they moved in lockstep over the previous 20 days up to that point. So, and sure enough, look, if you zoom in on this point, you can see that as we reach this maximum here, DXY was going up, Bitcoin was going up over this 20-day period. But by the time we already calculated that correlation coefficient, that behavior changed because it's not consistent behavior, guys. Not consistent behavior. So what am I trying to explain? Well, if we want to really get an idea of what's going on, we need to make this interval larger. Like Anthony Pompliano said, looking at short term isn't going to help. He claims let's look at a 180-day average. Well, if you change it to 180 days, something interesting does occur. We see that we're a lot closer to zero throughout a lot of this history. If we go over the entire history of Bitcoin, we can see that if you use the prior half year of data, you get periods where you do sort of have a positive or negative correlation that happened, but what's going on long term? That's the question over the entire interval. By December 3rd of 20, we can say that over the past 6 months prior to that, there was a negative correlation, which means that as Bitcoin went up in value, the dollar went down. And that was true right here in this interval. But, you know, this is something bears don't talk about. What happened after that? Well, you could see right here where we get to that lowest value in the negative correlation. By the time that's already happened, or just slightly after, right about here, DXY bottoms out and it starts to go up. So this little interval here is DXY going up, by the way, accompanied by the very most parabolic action for Bitcoin. I'm not making this data up, it's right here. There, we move more toward a positive correlation, but it's by the time it's already over. So look, what I'm trying to say here is we need to get an idea of what the correlation is over longer time frames. What would happen? Let's suppose we set this interval larger. 730 days, 2 years. Where did the correlation go? Where did the correlation go? It's not there. There is no correlation. This is because we only got data starting in 2015 here on the Coinbase chart. Let's look at something a little older. Yeah, there we go, 2013. So we take the last 2 years of data of every close of Bitcoin, record that price, use it in the calculation where we get the covariance, blah, 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 all that stuff, and eventually get a correlation coefficient. We do the same with the dollars closing values every day. And you guys, there's no correlation. That says negative 0.08. Okay, the mathematical interpretation of that is it doesn't exist on that time frame. It's pretty much, it's a very weak correlation. At best, it's a very weak correlation. At worst, it's uncorrelated. It's like uncorrelated. There's no two ways about it. The dollar is not causing Bitcoin to do nothing, and Bitcoin's not causing the dollar to do nothing. How can I prove this? Well, I can get the same result on any time frame you want. First of all, let's demonstrate it without a doubt on this time frame. We're going to take the limit, basically, as we go to infinity. We're going to take the derivative. We're going to do some calculus. We're going to look at the rate of change, okay? What if we set this to like 5 years? What happened over the last 5 years? 5 times 7, that's roughly 3,500, isn't it? No, it's 10 years. I just did a 10-year moving average. Basically saying, let's take all of Bitcoin's daily close history, correlate it to the DXY closing history. You can see in the early days, when we didn't have enough data, that correlation coefficient, like, dude, it's already approaching 0 way back then. Already approaching 0. It never existed, and it still doesn't exist. We took a huge period, okay, of 10 years, almost. Well, if we really wanted 10 years, right? 365 times 10 would be 3650. But let's take an interval like half that. Let's do 1825. Here's a 5-year moving average. I know what every bear is saying right now, because you're saying the same thing I did. And bull too. You're saying, well, Nate, maybe it doesn't show any correlation over the daily time frame because you know, you're only looking at closes, you're not accounting for weekends, whatnot. Let's change the time frame to the minute. This is where it gets really interesting. Change it to the minute, okay? Set your interval to how many minutes are in a day? 3,600? We're going to look at the last day and see if there was a correlation. There was no correlation. Guys, there's no correlation. The correlation's 0. There hasn't been a correlation. As an instantaneous rate of change and on longer time frames, it is an illusion. There's no correlation. Look, 0.0, the negative, it's 0. It's 0. It's always 0. It's not changing. Let's move up the time frame to 5 minutes. Oh, okay, and this is just looking at a day. Like, I don't know. I don't know what to say, guys. It's proved it. I've proven it. Let's go to the 15-minute time frame. On a 15-minute time frame, That means if we're looking at 3,600 periods, let's calculate it. 54,000 minutes. I don't know, 15 days? This is a 15-day moving average. We're on the 15-minute time frame looking at what happened over the last 15 days. But let's set it to the last 1 day. 3,600 divided by 15 gets us to 240. Oh my gosh, the correlation's back. Yeah, because look, your interval's sufficiently small. You're only looking at the last day. It's just small. It's too small. There's not enough data. You know, you're seeing noise. Law of large numbers, guys. Law of large numbers. Anthony Pompliano understands the law of large numbers. And he understands the difference between correlation and causation. And I want everybody else to understand it, because if you're betting based on the DXY movements, it's not making sense. Like literally there's an opportunity whenever people dump because the DXY pumped. Right here you can see this narrative so clearly lately. DXY is going up, DXY is going up. That's why Bitcoin tanked. It's the DXY. It's not. Like, it's just not. It's not the case. Let me try to show you why on the 1 minute time frame again. We're going to do the 1 minute time frame, and I'm going to show you how it changes as we go back in time. Let's look at the last 10 minutes. Whoa, correlations everywhere, but that's noise. Do you guys see a pattern? There's no pattern. We can't discern a pattern. But we're going to try and prove that this recent little downtrend the last couple days, this recent dip was caused by the DXY, or correlated, inversely correlated. We'll look at the last hour, the last 60 minutes. Over the last 60 minutes. Oh, but you're not looking at when it dumped. Okay, let's look at when it dumped. No, this whole era is when it dumped, guys. This whole era is when it dumped. In the 15, yeah, this whole era is the dump. Like up here, we're at all-time highs and stuff, pretty much. At least here we should see a positive correlation. You see all this stuff where the white's above there, right? So the white line is above the average line of 50, so it looks like a positive correlation. But let me show you how to get rid of it. We can't look back at just the last hour. Let's look back at the last 2 hours. You can see short-term trends. That's all. This is like normal TA. It's just short-term trends. But it doesn't. It's not predictive of anything. You can't use it for anything. Look, this is useless data. It's like literally useless data. I'm wasting my time and your time. Let's go here. Last 10 hours. So what happened over the last 10-hour moving average on the minute time frame for the correlation coefficient between DXY and Bitcoin? It's zero. There's no correlation. It's not correlated. There's no correlation. Nothing. I can even prove it further. I created a moving average of this to show that if you make a moving average of this, that moving average is also approaching zero. You're just not correlated unless I'm missing something. Guys, if I'm missing something, leave me some comments and give me a like or a dislike. Share this with friends. Let me know what you think about this. Is it powerful? I think it's very powerful. I think we can use it to not believe this crap about the dollar and the connection to Bitcoin. There is no. I'm sure they're connected in some way, but there's no relationship mathematically that I'm determining from this data based on this methodology. Hey guys, since shooting this video about a week ago, we have had a crash that occurred on Thanksgiving yesterday due to the new COVID-19 variant that's come out. As a result of that, I wanted to just quickly show you guys still how the DXY Bitcoin correlation has been affected. I took the interval of 1,440 minutes. We're on the 1 minute time frame. And I just wanted to go back here. On this period, you could see was November 24th. That was on Wednesday, I believe. You saw the DXY was really climbing a lot on that day. It was a flight to safety day. And as that occurred, you could see a very slight negative correlation of like negative 0.1. And I think that's because like everybody believes that there's a negative correlation, and then it tends to become a little bit self-fulfilling in a very short time frame. But I want to show you guys that still, for the most part, almost all the time, here we are the 22nd, the 23rd, the 24th, and all throughout this range, and I'm only using a 1 day time frame, like 1440 minutes, there's no correlation. It's at 0. And that remains to be the case. Even today, you know? We've basically got this correlation meter running less than 0.1 or negative 0.1. So it's a meaningless thing. There's no correlation. And that continues to be the case right now, today. So I hope you guys had a great Thanksgiving if you're from the United States, and if you're from anywhere else, I hope you're having a great weekend. And as we move into the holiday season, I hope everybody has a great time, and I wish you guys all peace and love and joy. And if you like the content, please subscribe to the channel and share this with people who will find value. Thanks. Bye.
Pumpy pump. Jesus Christ.